Hello everyone, good morning and welcome to today's morning report on Tuesday the 7th of June with me, Richard Perry, market analyst at Hand Tech Markets. We've got a pretty reasonable start actually to the European session, pretty decent improvement in risk sentiment, and we've seen that across the board on equities, with sort of gains on the FTSE, the DAX and the CAC. DAX is outperforming, and that generally tends to happen when you see this improvement in risk sentiment. You've also got the gold or the precious metals just mildly lower, treasury yields sort of mildly higher, and the dollar is sort of consolidating but slightly lower from yesterday's close, and that is coming on the back of this speech from Yellen last night, which basically sort of pretty much confirmed what the market already knew, the fact that June is very sort of pretty much off the table now in terms of rate hikes. She didn't sort of put any sort of timeline on a rate hike. I don't really think she was ever going to do that anyway, but she still sort of seemed to suggest that the Fed is on course for sort of gradual rate hikes or whatever, and she also sort of pointed towards Brexit being a fear for the markets, and the impact of Brexit would be negative for the markets. So that pretty much, as I said, sort of puts June off the table, maybe even July as well, because the expectations for July is still around about 25% on the Fed funds futures, and it certainly seems as though the market is pretty much sort of not pricing in, or I should say pricing out, the possibility of June, July. Means September is a possibility, but yeah, that's pretty much confirming what the market already had figured out from the payrolls report, although she did also say that you shouldn't really take too much from one single data point or one single payrolls report, and it's pretty much a confirmation speech rather than anything else, really giving you sort of definitive direction. But what it has done, as I said, is just basically just settled down the dollar. Really, the dollar obviously on that significant selling pressure that we saw on Friday. Bit of sort of consolidation yesterday, and not too much direction today. A little bit of dollar weakness, but not too much. Mainly coming on the back of we got a strong decline on the dollar against sterling, which is dragging cable higher. Again, another Brexit set of opinion polls coming out overnight suggesting a Remain victory. So you're going to get this continued sort of volatility in the weeks up to the referendum on the 23rd of June, and I think that it's going to just generate a very choppy sort of outlook on cable, but I'll talk you through the chart in a bit, but certainly we are seeing that today. The RBA kept rates on hold, and sort of pointed towards the fact that they were happy with how the sort of economy or the growth data was going with the current monetary policy, so that helped to pull the Aussie dollar higher by about 1%. No economic data of any note today, so we're sort of looking out, and now sort of moving on to my chart of the day, which is the silver chart. Now, we've had this recovery in silver, mainly driven by that move on payrolls Friday, really, but it's back to this downtrend, isn't it? This big downtrend. So you're sort of at a crossroads once again, because this downtrend is a fairly strong sort of downtrend in the last sort of 6 weeks or so. And today we've seen the downtrend being sort of confirmed, haven't we? The slight slide in the price overnight, leaving the reaction high to 1653, which is under 1656, which was this reaction high here in late May. So that is clearly a resistance near term, 1656, and just backing off that. But look at the momentum indicators, the RSI sort of pulling higher, the MACD lines coming together, and the stochastics are the main improvement with the confirmed buy signal. So this would suggest that this downtrend is now under pressure, and it'll be interesting to see how this market reacts now, because we've seen a move on the hourly chart whereby we've sort of pushed out above a pivot line around 1615, which was the old neckline actually, sort of an old pivot line, old key long-term pivot line actually, around 1615, held support and then became resistance. So the fact that we've rallied back above that, and that becomes now the line of support, so towards 1615. But look at these improvement on the momentum indicators, the MACD lines positively configured, just unwinding a little bit. Stochastic still positively configured, and RSI just unwinding as well. So I think 1650, whilst you're trading above that, I think that's would suggest you're in an improving outlook. But certainly there is resistance around that 1656 level that the market needs to break through, and then beyond that you're sort of looking around 1680, which is this old neckline of support, which was the top pattern. So that is your sort of next resistance overhead. So if you do see a break of that downtrend, that's your next resistance. So there is an improvement in the outlook, but there is still overhead supply and overhead sort of technical barriers from the downtrend. You also could arguably point towards the falling 21-day moving average as well, although that hasn't been such a good gauge of late, but it still is something to think about. And it'll be interesting to see if this minor improvement that you've had as the dollar has corrected continues, really, because the dollar, it seems to be as though the market now needs to reprice for a weaker dollar in light of the fact that the Fed rate hike expectations are being pushed out again. So could that drive silver higher? So it's an interesting crossroads on the silver chart. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.